Hello and welcome to another update on the DXY. I wanted to talk to you a little bit about the structure here on the dollar index chart. The price has clearly rallied in three waves from the potentially significant low. I mean, it's entirely possible that the entire correction that started in 2022 is over. When we talked about that in one of the previous videos, that very soon we should form a significant low. You see, this was the swing high in 2022. We had a corrective pullback, a rally. Oh no, this was not really a rally. Well, it was a sideways bounce, basically. It was a bounce, yeah. And then from here, a C wave to the downside unfolded. And we reached the 100% extension level. I mean, that's an ideal target, right, for such a C wave down. And the market could very well be in the process of reversing here to the upside. But I told you that one more low remains likely as long as we only see a three-wave move up. I mean, it broke above initial resistance, so that makes me consider the low is in, but I need to see 5 waves up. Okay, so the price reached targets. I could justify here easily one more low because circle wave 4, that topped here in May at around $102, opened the door to one more low in wave 5. And I can make a case for maybe one more low. But before you ask, why do we have an overlap? Why does it look so weird? Well, I know it does look weird, which is why I'm considering the low might be in. But I can call it a wave 1, wave 2, 3, a large 4, unusually large 4, but valid, because it could be a diagonal structure and maybe one more low in 5 towards $94, $95 to that trend line, the 50% extension, the 61.8 extension here in this area. So I can make a case for potentially one more low. But this is now a key spot because, as you can see, this is 3 waves up from the July low. With a 5-wave move up, it becomes significantly more probable that a long-term low has been struck. And I'm talking really about a long-term low on the dollar index, which could open the door to a larger rally. That can take years, yeah. So we get one more high. That could be our 5th wave. So we're now in support between $98.30 and $99.05. 1, 2, 3, 4, 5. So this is an area to watch for. If next week or so the market holds this support, avoids a decisive break below $98.30, then this would really open the door to one more high, and then we get 5 waves up, and that again would be a good indication a long-term low has been struck. And then of course we take a look at 5 waves up. That would be a wave 1, and it might turn into a much larger 5-wave move and everything. So it could eventually turn then into this, but that is the next step. Yeah, we want to get ahead of ourselves. So we don't even know if a low is in, but with the 5-wave advance, that should give us much more clarity. And yeah, so if we get one more low, if we break below 98.30, take out the 23rd of July low at $97, it opens the door here to one more low, as I explained. But then that could be the final low in this correction. Also here to the upside, the move would have to be a diagonal pattern. So it's certainly not impulsive because we have some overlap there, as you can see. But yeah, that's my view at the moment. That should give you the relevant support levels for next week. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. Thanks so much. Bye-bye.